We need to talk about the dollar yen because I'm quite convinced MOF will be forced to intervene in the currency market once again, sending dollar yen potentially lower, mainly due to market positioning and price action. Now looking at the weekly chart of dollar yen, I'm highlighting how far the market sold off after intervention and those levels. So out of these 4 occasions, 3 of those saw reasonable pullbacks at least, but they coincided the day of the top that the MOF intervened. So when they intervened, we saw a pretty decent sell-off. However, on this occasion, we saw a 5% pullback, and then the next few weeks was dollar yen grinding higher. It then went a marginal high above that first intervention level, and we saw a pretty decent sell-off. That's quite crucial because we're seeing a similar thing happen at the moment. We only saw a 3.5% pullback last time, and the last few weeks we've seen dollar yen grinding higher. Now we know from history that they have intervened a few times now around that 160 level. It's clearly a very important level for MOF. So the question for me is more over, will they do it sooner or later? Now looking at market positioning, it's worth highlighting that large speculators' short exposure exploded to a record high last week. So that alone does ring the alarm bell for potential sentiment extreme. Asset managers push their net long exposure to 3.5-year high, but even that is pretty close to its own record high. So these are classic signs of potential sentiment extreme. Closer look here on large specs, it's just trending higher beautifully. Now, what might be working against my case here is that you've got very strong economic data, inflation pressures for the US, and that means we've got a divergent policy between Fed expectations and Bank of Japan. That's clearly keeping the dollar yen supported, and that might limit the downside potential. But we do know through history that when the MOF intervene, we can get anything between a 300 and 500 pip move on the day, and that's worth noting if you're looking at bullish setups. Now looking over at the daily chart, these are the 2 recent examples. We saw a 500 pip decline there around and a 300 pip decline. In both occasions, the market bounced from those highs into the close, and it actually held above it for 3 days. Since then, we've seen about, I think it's a 5-week retracement higher. Volatility is low, which means it removes a reason for the MF to intervene too quickly, but we are near those key levels, of course. I do notice what this doji yesterday. It's really kind of sticky around that 160 level. The markets are clearly watching this level very, very closely, but the market does have this tendency to want to annoy the MOF. So I wouldn't be too surprised if we get another last hurrah attempt to break higher, forcing the MOF to pull the trigger. When I look at the hourly chart, like it or not, we can see that each time we get a bearish spike lower, buyers step in and push the market higher. It's not the nicest of uptrends, but it is trending high. You can see the VWAP, the monthly VWAP is trending higher, so is the weekly as well. So until we get that 300 or 500 pip move to the downside, and it will be quick, you'll know when it happens, it does appear that the market remains to be supported. Just keeping in mind that we've got previous cycle highs here, the March high and monthly R1 and the intervention level. All of these have the potential to spark a market reaction without the MOF intervening, because the market can be self-correcting sometimes as well. But I just think even if we do get a break higher, I think the market's really pushing their luck, and we are probably looking for an explosive move to the downside, although I don't think we're getting a 10% move like we saw previously. Anyway, if this is useful, wish you best of luck with your trading.